Hey traders and investors, it's Serge Berger here. Today I want to walk you guys through a trade that I had a lot of people ask me questions on, and that was a trade in Walmart we did in January for Clubhouse members, and we made about 10% on that trade in January when the broader market, of course, was very weak. So if we look at Walmart, of course, we understand that the stock had been acting very weak in 2015, so we saw a lot of relative weakness. That was due to some idiosyncratic situations where the company was basically due to some reorganization, had higher costs and some investing and all sorts of things happening that sort of scared folks a little bit. Also, of course, broader market weakness and all that basically came to a head, if you will, in the latter part of 2015, so about November, when the stock really got extremely oversold from a technical perspective. It also came into a whole bunch of in this major support area that had a price history dating all the way back to the early 2000s. So it was just a matter of then giving the stock some time to start working things out and start pushing higher. Of course, as we came into the latter part of 2015, we started to see the stock gap higher. So specifically on the 17th of November, it then started building a little bit of a base, and then started subsequently working higher, very orderly. So it first built a base here and pushed above its 50-day moving average, which is this yellow line, right? Then it started using the 50-day as support, and then it did the same thing for the 100-day moving average. And then it started building higher bases and higher bases. At the same time, as we came into the early part of this year, we saw a big risk off moment basically throughout the month, and it's continuing as I speak today, which essentially was something that pushed a lot of money into defensive stuff. So Walmart was then looked at more as a defensive play, having showed relative weakness throughout 2015, and indeed then was looked at as more of a relatively attractive thing in the risk off point in January, where utilities rallied and some of these defensive things like some of the retailers, specifically some of the discount retailers. So what we did early this week is we took profits in the stock, made about 10%. We bought it around the $60 mark in late December as the stock started breaking higher again. And the stock essentially early this week came into its 100-day move, I'm sorry, 200-day moving average, which is this red line, for the first time since, let's call that April of 2015. So that's when it started breaking below. So it hasn't been at all near it. So to me, this was a pretty good spot to start taking profits. So Clubhouse members and myself and other investors made about 10% in that position in January. So wanted to sort of walk you through a trade for you guys that's not purely technical, but also a little bit more sort of give you a macro backdrop of how you have to look at these trades, because it's not just technicals. I think while that's important, it's not the only thing one should consider. One does have to have an understanding of the bigger picture as well. And right now, while I do think the stock is probably going to consolidate here, maybe a little bit, there is still further upside to go, maybe into the low 70s at some point. Maybe in the coming weeks or so. So I hope this makes sense, guys. As always, please like the video, subscribe to my channel. I will see you in the next video.